Welcome back to the classroom. Today we're breaking down something absolutely critical for your trading survival. Picture this scenario for a second. Two traders sitting on two different screens but looking at the exact same stock. Same entry price, down to the last rupee, same setup, same chart pattern, same signal telling them to get in. On paper, there is absolutely no difference between these two trades. None at all. By the end of the day, they get completely different results. Price moves against both of them. It's a fake breakout. Trader A exits with a small, calculated loss. They're fine. Trader B keeps waiting, hoping for a reversal, and eventually takes a massive hit that wipes out a huge chunk of their capital. So, what actually separates them? It's not skill. It's not who read the chart better. It comes down to one thing: how they handle their stop loss. This was never about predicting the market perfectly because, let's be honest, nobody can do that, not even the professionals. The stop loss is the real difference between surviving in this game long term and wiping out your entire account in a single day. Let's look at our first concept, a huge trap for beginners. The mind stop loss. Did you hear that? Mind stop loss. You see a breakout, momentum looks strong, and you enter on FOMO, fear of missing out. Price drops right back into the range. Your inner dialogue starts negotiating. Just let me wait for one more candle. Or maybe it's just a quick retest. It'll bounce for sure. While you're caught up in that mental negotiation, your losses are quietly piling up. A minor mistake turns into a disaster fast because there's no automatic execution. The order isn't physically in the system, so human nature takes over. Hope replaces logic. You keep pushing that mental stop loss further and further down. A small planned 2% loss slowly turns into a disastrous 20% loss. The core idea: a system stop loss is a fixed, automatic order you place the moment you enter your trade. It sits right there in your broker's system. If price hits that level, your position closes automatically. Done. No emotions, no waiting, no mid-trade negotiations with yourself. Smart traders follow a simple process. First, identify the setup and key levels, support and resistance. Second, place the entry and the system stop loss at the exact same time. Third, they step back and let the market do its thing. Proper placement matters. Set your stop loss below a logical support level or previous swing low. Your capital is protected instantly. The moment that stop loss triggers, you're already safe. No damage control needed, no scrambling. You just close the laptop, take a breath, and go look for the next valid setup. Let's make this real with actual numbers. Say you're trading a stock at 500 rupees. Your analysis says the support level is at 485. So your system stop loss goes exactly there, 485, a risk of 15 rupees per share. Your target is 545, a reward of 45 rupees. A clean 1 is to 3 risk reward. Now here's where two traders taking the exact same setup go completely different ways. The disciplined trader's stop loss is already sitting at 485. Price hits it. He's out. 15 rupees down, no debate, no drama. He's already scanning for his next valid setup within minutes. But most retail traders never actually place that stop loss in the system. Price reaches 485, and instead of exiting, they shift it down to 480, then 470, then 450. They're not managing risk anymore. They're just avoiding the loss. By the time price is crashing toward 400, they're averaging down, throwing more capital at a trade that already told them it was wrong, purely to prove themselves right. Meanwhile, the disciplined trader has already moved on. His next setup, a clean valid entry with its own predefined stop loss, is now running in profit. And the retail trader? Still glued to that one losing position, still hoping, completely forgetting that a better trade was sitting right there the whole time. The mind stop loss keeps you glued to the screen. It depends entirely on your current emotional state, which almost always means delayed exits and unnecessary risk. The system stop loss is fully automatic. Your risk is predefined before you even take the trade. emotion-free execution, which is exactly what builds real trading discipline. Think of a trading loss like an iceberg. Above the water is just the stop-loss order, the technical exit. But below the surface are the real hidden traps: hope, fear, greed, and ego. The refusal to admit you were wrong. Most traders don't blow their accounts because of the stop-loss itself. They blow their accounts because ego and fear stop them from accepting it. They freeze the second the market moves against them. And when you strip away everything else we've talked about, it comes down to one golden rule: protect capital, not ego. Now, sure, the mind stop-loss might actually work, theoretically, if you're a highly disciplined veteran with 20 years of scars, screen time, and experience behind you. But be honest with yourself for a second. Is that actually you, right now, today? For the rest of us, the system stop-loss is basically the only realistic way to protect our capital and keep ego out of the driver's seat. Remember, there are no guarantees in trading. Your focus has to be entirely on controlling your risk, not trying to perfectly predict every breakout or breakdown. It's simply the cost of doing business. You take the small loss so you can trade another day. The market doesn't reward hope, it rewards discipline. Hoping for a bounce drains your account. Executing your risk management system is what grows it. Discipline, risk, consistency, survival. A trader who controls their risk can always take the next good opportunity. A trader who refuses small losses might never get another chance. So ask yourself, before your next trade, are you leaving your survival up to hope or locking in a system stop-loss? If you take one thing away from today, let it be this: knowing the rule isn't the same as following it. That gap between knowing and doing is where most traders actually lose their money. So before you close this video, I want to give you 2 tools that make discipline automatic instead of something you have to fight for every single day. The first is my risk-reward calculator. Before you even enter a trade, you plug in 3 numbers: your entry price, your stop-loss level, and your target. And it instantly tells you your risk-reward ratio, your position size, and whether the trade is even worth taking in the first place. No more guessing your risk in your head. No more entering first and figuring out the stop-loss after. Which is exactly the mind stop-loss trap we just spent this entire video talking about. The math is done before you ever click buy, so your system stop-loss is already built into your process from the very first step, every single time. The second is my trading journal. Every trade you take gets logged in one place. Your entry, your exit, your reasoning, your risk-reward at entry, and most importantly, a simple column asking whether you actually followed your own plan or not. Because here's the truth: you cannot fix a pattern you are not tracking. The traders who struggle with revenge trading, with moving their stop-loss, with FOMO entries, most of them have no actual record of it happening. The journal turns that vague feeling into real data you can look at, measure, and correct. After a couple of weeks of filling it in honestly, you start seeing your own patterns in black and white. Both of these are completely free. I've linked the risk-reward calculator and the trading journal template in the description box below this video. Download both of them today. Use them on your very next trade. Not someday, not once you feel ready, the very next one. Because the real goal was never just to understand the difference between the mind stop-loss and the system stop-loss. The real goal is to build an actual system around yourself, so that even on your worst, most emotional trading day, discipline is still your default setting, not something you have to remember to choose in the moment. Thanks for joining me in the classroom today.